Hello and welcome to day 5 of P7 Prepare to Pass, being organized by ACCA Pakistan. I am Kashif Kamran, your tutor for this session. Now the agenda for day 5 is a very important agenda, as we'll be focusing on reporting, where a student have a lot of queries and questions. But before proceeding on with reporting, which is a significant syllabus area for P7 and a very important area of P7 syllabus in terms of your pass and fail in P7, let's first start from where we left yesterday. Towards the end of the session yesterday, we were focusing on forensic, and I just need to spend another 10-15 minutes on the procedures of forensic, so that we exit out of that topic and we start on with reporting. I want to give good enough time to reporting today, but we did most of the forensic yesterday in terms of the matters and in terms of the steps in planning. I just need to focus on writing procedures so that you become good on writing procedures. Okay, let's do that recap. Okay, please, we will be going back to the question we were doing yesterday, which was the kennel question, June 13. But just before coming to that, let's start with a recap. Now, in terms of the recap, and recap in terms of forensic, forensic in terms of matters, forensic in terms of steps in planning, and forensic in terms of procedures. Now, till yesterday, we got to a clear conclusion that in the past paper, the examiner has asked the matters with regards to theft and with regards to insurance claim. And that was something very natural, that if the examiner asks you, what sort of matters will you consider on theft, you should know the certain answer. And what sort of a matter you will be considering on insurance, you should know the certain answer. Then we went to steps in planning, and steps in planning were identified as 4. First, second, third, fourth. The first step was identified as scope. The second step was identified as timing. The third step was identified as direction. And the fourth step was identified as resources. And I did mention that yesterday, that all these 4 steps can be linked to any service. Whether you're offering audit, the 4 steps will remain the same. Whether you're offering a non-audit service, the 4 steps will remain the same. So every service starts with planning, and every planning includes a scope, a timing, direction, resources. So irrespective of the type of question, if examiner asks you the planning matters or steps in planning, then you should know what basically are the planning matters or what basically are the planning steps, irrespective of the topic in P7. Okay, the last thing where we need to focus on procedures, and I'll do one very good exercise on procedures today for 10-15 minutes, because I want to give you a very good sense. Procedures, you must have understood by now that they come in so many questions in P7. Procedures can be in the first question. Procedures can be on forensic. Procedures can be on a prospective financial information. And procedures can be anywhere in the exam paper where the examiner asks you, recommend procedures on fill in the blank or recommend procedures on something. But the bottom line is that I want to emphasize not just for forensic, but beyond forensic. I'm taking this to my next slide because I just want to do one last and a very strong emphasis on procedures, irrespective of the topic. Let's do that quickly. Okay, let's go to the next slide and let's go to one final understanding of procedures. Now, please consider this very carefully. If you have any writing pads, you have any piece of paper in front of you, please note it down very carefully, because this is something very important, and I'm doing it for one last time. Already today is the second last day, so let's make it wrapped up today. Okay, now if I look at procedures in P7, though we are doing it currently on forensic, but procedures irrespective of the topic. Yes, whatever procedures comes in, either the procedures are on the accounting treatment, or the procedures are on forensic, or the procedures are on the prospective financial information, what you should be clear with is that whenever you're writing procedures in P7, the procedures in P7 has to come from the case. Procedures will come from the case. You have to involve in case, and you have to involve in case, and you need to extract the procedures. You need to extract the procedures from the case. I'll just demonstrate them as quickly as possible in the next 5 minutes. Secondly, you should remember that procedures have to start with verbs. Procedures should start with as if you being auditor is doing something. And I have already given you a list of verbs which includes in procedures. Apart from that, you should also know that procedures, whenever you are writing a procedure, you should know that procedure has a definite reason. If for example, you are recalculating something, or you are reviewing something, or you are analyzing something, you should know for what, why, or you should know to confirm what. If you review the board minutes, why? If you recalculate the finance cost, why? Well, what's your objective? What's the reason? The reason will come as something very important in your 1 mark procedure. So you should write a verb doing something. You should do something to demonstrate that you're writing a procedure. I've already given you a list of doing something on my day 3. And the reasons, right? And the last thing, you should know the marks. Every procedure carry 1 mark. Please take notes of this very effectively. This is irrespective. Wherever you get procedures, you need to stick to case, involve in case, extract procedures from the case. Then you need to apply the verb that demonstrate as if you're doing something. Then you need to write a reason for it. And then you should know that 1 procedure carry 1 mark. So you should know how many would you be writing in an exam paper. I hope this gets well with you, and you would be strongly implementing this on the day of exams. Please note it down, take a snapshot. I'm just moving ahead of this within next 15-20 seconds. So if anyone is on it, please ensure that you are smoothly taking notes of it. And I'm proceeding to one very good exercise of demonstrating this. Now remember the rule, and I'll demonstrate. Case, verb, reason, marks. Case, verb, reason, marks. Let's do an exercise. See how easy it is to make procedure irrespective of topic. Let's do case, verb, reason, marks. Case, verb, reason, marks. If anyone can make a mnemonic, do make a mnemonic. CVRM. Case, verb, reason, marks. Case, verb, reason, marks. Let's go down and let's start with the exercise. So if everyone remembers this CVRM, case, verb, reason, marks. Okay, let's go down and start a quick drill on it. Okay, if I go to the exam paper, we were on yesterday, and I'll take a new one as well for today to demonstrate. If all of you can see this, all of you have this handout from the yesterday session. If I go down in this handout, okay, if I look at this question we were doing yesterday, the kennel, where there was a theft in the company. I hope you must have read this over the day, yesterday and today, because you're very near to your exam papers. Now, what I just want to emphasize on is that in a question yesterday, we need to recommend the procedures. And we had 6 marks for writing procedures. Now, you know, case, verb, reason, marks. So 6 marks means 6 procedures. So we know the marks. Now what's left? Case, verb, reason. Case, verb, reason. Now let's see what we have to do. We have to make procedures on what? Amount of claim. So amount of claim is our objective. Amount of claim is why are we making procedures, right? So when we know that our procedure should be on the amount of claim, our procedures have to be on amount of claim. Let's read the case. The case says the audit committee of the group has contacted Kennel. The audit committee of the group has contacted Kennel to discuss an incident that took place on the 1st of June. There was a theft at the group warehouse where inventory is stored prior to dispatch to customer. See from where the theft has happened? The theft has happened from the warehouse where inventory is stored prior to dispatch to customer. That is something important. The CCTV filmed the thief loading a lorry belonging to the group, which contained boxes of the finished goods. The last count took place on 30th April. See how many facts the examiner is telling you when you involve in case. The examiner is telling you there was a theft, and the theft took place from the warehouse prior to dispatch to customer. The CCTV filmed the thief loading a lorry belonging to the group with boxes containing the finished goods. That means 2 things have been stolen. The finished goods have been stolen and even the lorry has been stolen. Thieves loading a lorry belonging to the group, so that lorry belongs to the group, has also been stolen and containing the finished goods. So is everyone in agreement that 2 things have been stolen? The attendees, is everyone clear? 2 things have been stolen? Okay, good. The group insurance cover is in place, and the Kennel Forensic Accounting Department has been asked to provide a forensic accounting service to determine the amount of claim. So what we need to do, we need to determine the amount of claim in respect of the theft. The insurance cover the cost of asset. The insurance cover the cost of assets lost as a result of theft. So is there an insurance cover? Is there an insurance cover? Yes, and the insurance covers the cost of the assets, not the book value, right? The cost of the asset. How many assets have been stolen? How many assets have been stolen? 2. So the insurance covers the cost of the assets? Yes. So what can we claim from the insurance company? The book value or the cost? We can claim from the insurance company the cost, right? Not the book value. Okay, perfect. So now let's do a clear exercise. We need to work on the amount of claim, and the claim covers the cost of the assets, right? And the cost of the asset means the cost of the lorry and the cost of the finished goods. Okay, is everyone clear with that? Okay, now what is the question telling us? The question is telling us that finished goods have been stolen. Yes, Muhammad Amir, that means theft. Okay, finished goods have been stolen. Let's see what is the finished goods here. If I go up, see what is the question telling you. In the part A, it says the company manufacture In the part A, the question says the company manufacture mobile phones and laptops. So what is the company manufacturing? The company is manufacturing the phones and the laptops, right? So the finished good inventory has been stolen. Now that means which finished good inventory has been stolen? The laptops and the mobile phones. So either one of them or both of them has been stolen, right? So is everyone clear on that? So see the involvement in the case, verb, reason. Now, do we know the case? Do we all know the case? What has been stolen? And is there an insurance cover? Is there an insurance cover? And the insurance covers the cost of the asset. So once we know the case, now let's go back and let's do a very good exercise on that. What have we learned? Okay, this is something very exclusive I'm doing for the webinar attendees. This is this CV case, verb, reason, marks. Now we know the marks, right? How many marks? 6 marks. So how many procedures? 6 procedures, right? Okay, case covers the cost of assets lost. So can we have an insurance claim of the cost of assets lost? And what we need to determine? We need to determine the amount of claim, right? So now I need your quick feedbacks. The first asset we lost is the lorry. And the second asset we lost is the finished goods, right? Finished goods, which are either laptops or finished goods which are either the mobile phones. Now, should we know the cost of the lorry? Cross. Should we know the cost of the finished good lost? Cross. I add them, becomes my claim. The cost of the lorry, right? The cost of the finished good, that becomes my claim. Now, if that becomes my claim, we know these insurance companies are very skeptical when they reimburse the claim. And we are very sure that whenever there is a theft in a company, the theft is informed to the police so that the police can do some recovery, or the police can recover the lorry, the police can recover the finished goods. There can be a chance that the police must have recovered the lorry, or the police must have recovered everything. Now, if everything has been recovered, can we claim from the insurance company? If everything has been recovered, can we claim from the insurance company? No. So is there a chance that the police has recovered everything? Is there a chance that the police has partially recovered some of them? Yes. So from the claim, will I minus less any recovery made by the police? Any recovery made by police? Okay, remember you're doing a forensic investigation. Recovery made by police. Will I do the minus recovery made by police? And will that becomes my final amount of claim? My final claim amount, which I should do the insurance company. This one. Is everyone clear with the picture in front now? Case. See how I brought the case to fingertips. The very first thing in the case was that what I should claim from the insurance company. The question told me I can claim from the insurance company the cost of the assets. So knowing the cost, I should know how many assets have been stolen. And the examiner told me 2 assets have been stolen. So I put the 2 assets and I put the cost of the 2 assets. Now, which assets? The lorry and the finished goods. And we go down, right? CVRM. C stands for case, V stands for verb, R stands for risk, M stands for marks. Okay, is everyone clear with the formula? Is everyone clear how am I using the case? So can I put case out of my context now? Is right. Now what I have to do? Verb and reason. Verb and reason. Okay, let's go one by one. Finished goods. Lorry. How would I verify the lorry cost? How would I verify the lorry cost? The lorry belonging to the group. The fixed asset register, perfect, because the lorry belongs to the group. Asset book, perfect. So from where would I verify the lorry cost? I would verify the lorry cost by reviewing the fixed asset register. Review the fixed asset register. So what is the reason? The reason is review the fixed asset register to confirm the cost of the lorry. I can even review the purchase invoice. Muhammad Abidi, perfect. I can even review the purchase invoice. I will know the cost of the lorry. I can even review the fixed asset register and I will know the lorry cost. So is that my one procedure now? Lorry, cost of lorry. So should I put this cross here? Okay, next. Recovery made by police. Should I discuss with the audit committee whether any recovery has been made by the police? Is that a good procedure? Should I discuss with the audit committee that whether the police has made any recovery? Yes. So can I write my procedure here? Discuss with the audit committee. Discuss with the audit committee whether any recovery has been made. Discuss with management whether the lorry was taken on lease. No need to go that far, right? We're just assuming the lorry belongs to the group. So we're just assuming this to be part of our fixed assets. Okay, so we will discuss with the audit committee, right? Any recovery made, discuss with management whether any action has been taken to recover. Yes, that Amaduddin Mughal, that's perfect. So you're getting down with procedures perfectly now. That's good to see. Good to see. Okay, back to the answers. So we got less recovery made. So we got less recovery made. Point. So should I put it off my list? So after the 6, how many I've got? I got 2. So I'm left with 4. Now, should I ask, should now I work on the finished goods, which is the more important thing? And finished goods cost. Is everyone clear on this particular slide? I need to move to the next one, right? Anyone still on it? I'm just moving ahead. If anyone is on it, please take a final snapshot. I'm moving towards the next. I need to work on the finished goods. And I need to make 4 procedures on finished good quickly. Okay, perfect. So is everyone finding these making procedures easier now? Is everyone finding a sense of making procedures? CVRM. So what are we left with now? We are left with finished goods now. Okay, let's go down with finished goods. Okay, finished goods quickly. If you look at the finished goods and we look at the cost of finished goods, we have to make 4 procedures on the cost. Now see how easy that is. First of all, I should know the cost of, to find the cost of the finished goods, I should know the quantity stolen multiplied by the price per unit. Is that the right formula to find out the cost? Is that the right formula? Yes. So should I know the how much quantity has been stolen? Is that important? Yes. And once I know the quantity stolen, can I multiply that by the cost per unit? Is equal to the cost. Okay. Now see how easy cost per unit is. Can I verify the cost per unit from where? Cost per unit will come from where? How would I know the cost per unit? No, not from invoice. The company is manufacturing. The company is manufacturing them. Yes, the company is manufacturing them, right? I cannot take the purchase. Yes, Muhammad Umar, cost card. So cost per unit will come from where? Review the cost cards. Review the cost card. Review the cost card to confirm what? The cost of laptop and to confirm the cost of phone. So see, I got another procedure, the cost card. See, you need to be clever. Purchase invoice? No, this is a manufacturing company. So manufacturing company would have a cost card. Review the cost card to confirm the cost of the laptop and the cost of the phone. So have I got my procedure on the cost per unit? Okay, now I'm left with one last, right? Quantity stolen. Now the examiner is telling me that the quantity stolen, there is a CCTV footage. So can I use the CCTV footage as part of my quantity stolen? Yes. So can I watch the CCTV footage? Because it's a film, right? It's a film. So can I watch the CCTV footage? Yes. And by watching the CCTV footage, will I know which inventory has been stolen? Which inventory was stolen? Whether it was the mobile phone or the laptop? I hope you have common sense, right? The packing of the mobile phone and the packing of the laptop can easily be distinguished through the footage because the boxes are very different. The box of a laptop, the box of a mobile phone is very different, right? So can I pick from the footage whether it was a laptop box or whether it was a mobile phone box? Yes. So can I watch the film to ensure which inventory has been stolen? Because that will help me confirming the cost. Okay. And can I assess from watching? Can I make an estimate of how much has been stolen? I cannot be sure, but can I estimate the stolen? Not 100%, but can I use the estimation? So can that give me my procedures? And once I know how much quantity has been stolen, can I recalculate the cost of inventory stolen? Recalculate the cost of inventory stolen. Recalculate the cost of inventory stolen. Yes, we can also use that inventory count. The last count took place on 30th and the inventory was stolen on the 1st of June. So you can also do a reconciliation from the 30th April to the 1st of June. That itself is a very valid procedure. Yes, by the volume of the lorry and can estimate the boxes which can be uploaded in the lorry. Perfect, yes sir, Fiaz. That is a perfect good procedure. Right? Is everyone getting sense of it? Is everyone getting a sense of it? Right? You can do a reconciliation. You can even correspond with the customer whether the inventory was received by the customer. If the inventory was not received by the customer, then that means it has been stolen. Because the company do make a packing list, right? So there must be a packing list. So you can contact the customers for the packing list and can ask them whether they got the goods, whether they didn't got the goods. So if they didn't got the goods, that means it has been stolen. But are you getting a sense of involving yourself in case? Are you getting a sense of involving yourself in case? And is it beneficial? Is it good? Is it important? Will that help you in exam paper? Will that really help you in exam paper? You involve in the case and you will find your procedures. So see what is happening in the case. See what is happening in the case. I've seen so many students, they make their own stories. They make their own stories. You cannot make your own stories. You have to involve in case. Yes, Faima, Bilal, you need to recalculate the cost of inventory stolen. Once you know that how much inventory has been stolen, multiply by the cost per unit, you have to recalculate that, right? So recalculate the cost of inventory stolen. So is everyone clear with that now? Okay, one last exercise prior to the namaz break. Okay, let's see how good you are now. Procedures is equal to C. Is everyone knows procedures is equal to C? We are P. Right? So to make procedures, involve in case. To make procedures, use verbs. To make procedures, write the reason. And to make the procedures, write the, to make procedures, you should know your marks. How many? Is that clear? Inventory stolen can be calculated through the work back from the last inventory count. Muhammad Ramzan, perfect. Perfect. CVRM, Muhammad Tahir, I did made that CVRM. I think you joined a bit later. Please, I'll post the picture on the WhatsApp group after the end of the webinar. Should we also explain the formula to recalculate? Yes, you can put the formula to recalculate in the bracket. Ifra Anjum, correspond of management with the insurance company. Fahad Shabir, that is a very good procedure. Agree the physical count with the relevant document. Is that a valid one? No, Sharmila, you can do the last count, April 30th to the June 1st reconciliation. So you can do the reconciliation from the April 30th to the June 1st rather than doing the procedure you wrote. Sumaya, CVRM is for all procedures or only forensic? Sumaya, I mentioned this mnemonic is irrespective. So whatever procedures you do in exam paper, the CVRM will be a saver for you. Okay. Can you check that with the police if they had and what has been recovered? William, yes. Rather, you can ask the management, because I think going down to police would be very difficult for the auditor. So you can bring the management and you can ask the management what police has recovered. There must be a police report, or there must be some evidence from the police, right? There must be some evidence from the police on that, right? Is that clear? Okay, I'm going towards the namaz break, but just before the namaz break, is everyone clear with CVRM, and will that really help you in procedures? Azimullah, we cannot correspond with police directly. It has to be management. Police will correspond with the management, not with the auditor. CVRM, is everyone good with that? CVRM, will that be a lifesaver for you in exam papers? Will that really help you out? Perfect, perfect. Now see how many mnemonics. MTR, now we have CVRM. And that's a good time for break now, right? We are going towards the namaz break now. We are going towards the namaz break. Okay, we're taking the prayer breaks. It's 6:35 approximately PM Pakistan Standard Time. We'll be back approximately 6:45. It could be ±2, 6:45 PM Pakistan Standard Time. And post break, it is reporting. So please be in the session, because we'll be starting with something very, very important where you need to be very good at, right? And in the meantime, keep working on CVRM. I'll meet you after 10 minutes. Okay, welcome back post namaz break. Now the agenda has to be reporting, and just before starting reporting needs to make something very clarified. Now during my reporting concept building, which is a very important area to P7, first of all, I'll prefer that you keep your question answer session to the topic and don't just start making myths and assumptions and philosophies around the particular topic. You might be getting the answer of your query within my concept building. So I'll prefer first concentrate on the concept building. And if you have any particular queries, keep posting them after like half an hour or 45 minutes. I hope within that span of time, a lot of queries will be mitigated. And again, queries should be on the subject, and queries should not involve your own assumptions, myths, philosophies, because what I'm trying to do is I just need to bring you closer to exam paper, and I just need to make things in the context of exams rather than making things in illusion and on assumptions. I hope that is clear with everyone, and let's start with the last topic of this webinar, which is now to focus on reporting. Now, towards the day 5, which is a very important day, we are finally into it, and we're starting with reporting, which is such an important topic. In terms of reporting, as with every topic, there are questions which are session questions, there are questions which are home questions, and you have ample amount of practice material. You have like 3 questions in session, 2 at home. In all, you have 5 questions to practice, which is ample amount of practice ahead of your exams on 5th of March. Okay, the article supporting this. The article supporting this is the new audit report. The new audit report article will support your learning. And then there is another very important article which says audit reporting, an update for P7 students on CAM, key audit meta. Please do read both the articles so that you have a very good knowledge on the subject matter prior to attempting your exams, because both the articles address the new report which you will be looking for in your exam paper. Obviously, the new report is not the first time into March 18 exams. It's been coming throughout the 2017 exams. So this is not something you will be going through for the first time. You should be equipped with knowing the new report. Okay, so these articles will support your knowledge. Please do read them. These are mandatory. These are must. And then there are a lot of practice questions here which you have to practice. Okay, let's start with the topic. The key audit matter means, Muhammad Amir, that's too early question. Obviously, I'm starting with the topic. So within the topic, I have to explain what key audit matters are. Obviously, I haven't started the topic yet. That was exactly my point. Hold your questions. Hold your questions. Concentrate on the topic. Okay, now try to understand things systematically and properly. The very first thing P7 students should know when they are appearing for March 18 exams, that what are fundamental changes to the new report. If I need to make it specific, I'll say there are 4 changes to the new report. Number 1, the format. The format of the report has changed, and the P7 students, you should be equipped with that. Number 2, there is an ISA which has been introduced for the first time, which is known as ISA 701, which looks after key audit matters, CAM. And I've just shown you on the last slide that the examiner has written an article on CAM. So that is a very emphasizable area of P7, right? So format has changed. One thing has been introduced, which is known as CAM, and I'll try to emphasize on CAM in terms of that. The third thing is ISA 720. ISA 720 was there in the older report as well, but something has changed in ISA 720. So we have to see what has changed in ISA 720. And the last thing is the ISA 570. The ISA 570 is the very important change to report, and that report change is the going concern. There has been some fundamental changes in going concern. Now, those of you who are repeating P7 must know that going concern has been a very important area of the past exams, and you should be very good on going concern. So 4 changes, right? The ISA 700, the format, the ISA 701, the key audit matters, ISA 720, the other information in the document containing the financial statement, and ISA 570, reporting on going concern. Okay, let's move down with the 4 changes. IFRA, irrespective of being tested, I'm just guiding you on what are the 4 major changes in the new report. I am still to give a verdict on what is high likely from reporting in March 18 exams. I'm just first guiding students on what are 4 fundamental changes, irrespective of whether they have been tested or not. Okay, out of the 4 fundamental changes, let's go down first with the format. The format of the report has changed, and you should know this. This is very important for March 18 exams, because I am sensing a question which has come so many times in past paper, but since the new report, this question has not come, which is critical appraisal of the report. So critical appraisal of the report is something which looks high likely for March 18 exams, and I hope you've seen questions on critical appraisal of the report in the past papers. That looks exactly very important for March 18 exams. And if that question comes in, then you should know the format of the report, because I hope you know that whenever the examiner gives a report in P7, the report is not very properly structured, and you need to find the problems. Examiner will never ask you to write a report, but will give you a report, and he will ask you critically appraise the report in terms of the problems in the report, in terms of the issues in the report, in terms of the weaknesses in the report, right? So the format of the report. Now, something which has changed fundamentally since the new report has come in is the format between a listed company and a non-listed company. There was no such distinguish prior to the new report. But since the new report, this is now distinguished into 2 sets. Now, if you are reading a question in P7 reporting, now I want to make one thing very clear. Since the new report has come in, and in all the question 5, which has been published after the new report has come in, the examiner will write in the question 5, this is a listed company. The examiner will even write in question 5, this is not a listed company, because that shows both companies now have something different in terms of report format, right? So you need to be very clear on, if the question says this is a listed company, then you need to follow this. If the question says this is not a listed company, then you need to follow this. So is everyone clear with that? I hope you know that the examiner at times even don't tell you whether the company is listed or not. But in a question number 5, the examiner is now doing that very specifically. The examiner is doing that very specifically. The examiner will tell you this is a listed company, and the examiner will tell you this is not a listed company. So please be very critical of that, because that will change many things. Okay, now irrespective of whether the company is listed or not, there are so many similarities, right? Opinion. I hope all of you remember opinion has been a very big change. Opinion was in the report, but in the new report, the opinion has become the first para. So your report will start with opinion para. And after the opinion will come the basis. So normally in the old report, we used to have basis first and opinion after. Under the new report, which you will have to do in exam paper, opinion will come first. Salman Ali, that's exactly my point. Since the reporting question has changed, the examiner is putting that very specifically. This is a listed company, this is a not, so you cannot take any assumptions. That assumption can be taken in rest of the P7 paper, where the question is silent. We normally assume the company to be non-listed. Okay, so opinion comes first, basis comes after. Then see the next paragraph. MU means the material uncertainty relating to going concern. See, that is the para 3 in both the listed companies and the non-listed companies. Now, you need to understand one thing. This para 3 is conditional. Conditional means what? If the conditions are met, the para 3 will come. That is MU, material uncertainty relating to going concern. And if the para 3 will not come if the conditions have not been met. So is everyone clear with that conditional word there? Conditional means the para 3, MU, material uncertainty relating to going concern, have some conditions. If the conditions are met, you will add the paragraph. If the conditions are not met, you will not add the paragraph. Right? Fourth, in the case of the listed company, can you see a very visible thing here known as CAM? And in the case of the non-listed company, you can see EOMP. See, that is a big change. That is a big change. So far, everything was same between listed and non-listed till the time we came to the fourth para. There is a big change. In a listed company, there is a CAM, key audit meta, and in the non-listed company, there is EOMP, emphasis of a meta para, Amaduddin Mughal. Then after that, all things remain the same. Other information para, other information para, other meta para, other meta para. Responsibilities of the management, responsibilities of the management, responsibility of the auditor, responsibility of the auditor. Is that not simple to learn for exam paper that the only difference between a listed and a non-listed company is a CAM and EUMP? Is everyone clear with that? The only difference between a non-listed company and a listed company is a CAM versus EOMP. Is everyone clear with that? The attendees, your enthusiasm, yes, no answers. The only difference between a listed and a non-listed company is CAM and EOMP. Rest, both the reports are the same, right? Rest, both the reports are the same. Perfect. Okay. Now, is everyone clear with the format? So is it easy to remember that for exam paper, the format of a listed company and the format of the non-listed company is perfectly the same with the only one difference, which is CAM and EOMP. Right? So let's go down with the second thing. If you're clear with the format, now let's do a quick exercise. If you know the format, now we need to focus on something which are important in the report. Now, what is important in the report? MU, material uncertainty relating to going concern, CAM, other information. You should know these three very well for P7. You should know these three very well for P7. And on the other side, the same three. So to be good on P7, what you should know MU relating to going concern. Yes, the sequence is very important. CAM, you should know other information. And in the case of a non-listed company, you should know MU relating to going concern, EOMP, and other information paragraph, right? So let's start finding a quick exercise on each one of them. Okay, let's do a quick exercise. Okay, now so for P7, reporting, fundamentally, I should know four things. I should know opinion. I should know MU relating to going concern. I should know CAM. I should know EOMP, and I should know other information. So let's make a final look for P7, and I start with one by one. What you should know to be good on reporting question, right? To be good on the reporting question, you should first know the opinion. And how many types of opinions are there? Number one, an unqualified opinion. Number two, the qualified opinion. Number three, the adverse opinion. And number fourth, disclaimer of opinion. Right? Is that true? 4, right? Second, what second we should know for P7? We should know material uncertainty relating to going concern. Material uncertainty relating to going concern. Okay. Now what we should know for material uncertainty relating to going concern? We should know that material uncertainty relating to going concern is conditional. That means we should know the conditions. We should know conditions. Because if you don't know the conditions, how would you know whether a MURGC will come or not? Right? So we should be looking at the conditions. What are conditions for MURGC? And thirdly, we should also know that the MURGC is both for listed companies as well as it is for the non-listed companies. So irrespective of the company, it will come, but you should know the conditions, right? Third, what we should know is we should know CAM. Now, whatever CAM is, I need to explain that, but CAM will only come if the question says it is a listed company. Is that true? CAM will only come if the question says it is a listed company, right? CAM will not come if the question says it is not a listed company. So what is the first important thing for CAM? The company has to be listed, right? Then next, we should know what CAM is. What CAM is. So I have to explain that. Then next, we should know what is EOMP. EOMP will come in a case of a non-listed company. And we should know what are the rules of EOMP. What are rules of EOMP, right? And the last, we should know other information. We should know that other information will come when. Other information is what? And other information, I'll just tell you, but I'm writing one thing here to complete my chart, that other information is non-conditional. Whether this will come in any case. There is no conditions attached with other information. This is non-conditional, and this will come in the listed company, and this will also come in non-listed company. Okay, now these 5 columns in front of you is exactly making what you should be knowing for attempting a question on reporting. You should be good on opinions. You should be good on MURGC. You should be good on CAM. You should be good on EOMP. You should be good on other information. Is this chart in front of you clear to everyone? I'll start one by one with each column so that it becomes perfectly clear and you can then attempt a question on reporting. Okay, let's move ahead. The next thing. Now, the first thing we should focus on is Going concern, MURGC. Before I come to opinion, right? I'll do opinion towards the next half an hour, but I first need to focus on the MURGC, the CAM, and the emphasis of a meta paragraph. Okay, now see what exactly has to be done for P7. Please remember one thing, that you should look at the case. If a question comes on going concern, look at the case first, right? If the case says the company is a going concern, but material uncertainty exists, which are disclosed in the notes to financial statement. So what is the condition for MURGC? The company is a going concern, but there are material uncertainties which are disclosed in the notes. So if they are disclosed in the notes, what will the auditor do? The auditor will add a section which is known as MURGC, material uncertainty relating to going concern. Did you saw that section at number 3 of the new report? So when will you add an MURGC? When the company is a going concern, plus there are material uncertainties, but they are disclosed, right? But if they are not disclosed, can we write MURGC? If they are not disclosed, can we write MURGC? No. So are there conditions for MURGC? The company has to be GC, there must be MU, and they must be disclosed. No, it will not affect the opinion because it has been disclosed means this is something positive. So I think the MURGC is addressing something in the positivity, not in negativity, so will not affect the opinion. Okay, second, company is a going concern, but material uncertainty exists which are not disclosed. Now that is just the opposite. So if the company is a going concern, there is a material uncertainty, but the material uncertainty is not disclosed. Now we know if something is not disclosed, you have to modify the report. Is that true? If it is not disclosed, will it modify the report? Yes, right? Either it will issue a qualified report or it will issue an adverse report. So I think the first two things are very simple, right? MU and disclosed, MU and not disclosed, right? I hope you will not make any blunder on that. MU disclosed and MU not disclosed. Qualified is one of the basis, one of the type of modification. I'll make that clear, Manan, once I come down to opinions. I've considered your question. I'll be responding to that, right? Yes, ISA 705 deals with modifications. I've just given the reference that ISA 705 deals with modification of the report. If you want to write that in the exam paper, else has no importance. Okay, the last condition. This is very important. See, there are doubts over going concern, but the auditor concludes there are no material uncertainty. Close call. See, what is the last case? The last case says there are doubts but not MU. So the question says the company is a going concern, but there are doubts. Not MU. What will the auditor do if there are doubts but not MU? The auditor will add a CAM. Now, you should know doubts are what? Unless and until, how will you pick them from the exam paper? These are doubts. That means the student should know what is the difference between material uncertainty. What is the difference between material uncertainty and doubts? Is that true? Should you all know what's the difference between material uncertainty and doubts? Yes, right? Because if you're not sure, then how would you pick an answer? Now, tell me, the last equation, will it only come for the listed company? The last equation? Will the last equation only come for a listed company? Yes, because it says CAM, and CAM is only for listed company. The first two conditions can be for listed and non-listed. The first two conditions can be listed and non-listed. And the last condition is only for CAM. And CAM means listed. So if there are doubts but not MU, you will find this equation where? You will find this equation in Listed company. Okay, let's do a case. Now that means there is one thing known as MU. There is one thing known as, so is that important? What are doubts? Obviously, the doubts is only for listed companies. So the doubts have been introduced for listed companies. How can it come in a non-listed company? For a non-listed company, there are only two conditions. MU disclosed, MU not disclosed. The doubts condition is exclusive to listed company. It cannot be a case with a non-listed company. So just forget about that. Is everyone clear with this? We should know what are MU and we should know what are doubts, right? So let's make an examples. How would you pick in an exam paper whether something given in the exam paper is a material uncertainty or whether something given in the exam paper is a doubt, provided you are doing a question on a listed company? See this. Suppose I'm doing a question in the exam paper and it says the company is listed. Now, if the company is listed, I have to be very careful, because if the company is listed and there are doubts, what should I do? If the company is listed and there are doubts, then what should I do? That I should include a CAM. And if the company is listed and there are MUs, then what should I do? If it is disclosed, I'll do something different. And if it is not disclosed, I'll do something different, right? So is it important to know what are doubts and MUs? Because if the company is listed, you might spoil your answer. Because if the company is listed, first of all, you should pick whether they are doubts or MU. Because if there are doubts, you should put them in CAM. If they are MU, then you should ask yourself two questions in the exam paper. Whether those MUs are disclosed, whether those MUs are not disclosed. Is everyone clear till this point in time? Okay, let's find a difference now. Suppose the question says current ratio has fallen to 0.60. Will I consider that as a doubt or MU? I'm only getting one right answer, two right answers now, 3, 4, 5. MU, not doubt. Whoever is giving a doubt answer is absolutely wrong. Whoever is giving an MU answer is perfectly right. See, what is the reason? I hope you know that if the current ratio falls under 1, that is something very significant. If the current ratio falls under 1, that is something very significant. If the current ratio is above 1, that's good. But if the current ratio falls below 1, that's very bad. So MU means when something is very significant, and doubts means when that something is very insignificant. Now, current ratio has fallen to 0.6. That is such an important thing. So I have to consider that as MU. I cannot consider that as a doubt. Second, company has now become loss-making. Company has now become loss-making. Will I consider this as an MU or doubt? Will that I consider that as MU or doubt? Again, those of you are saying doubt. Again, you're doing the same mistake. Company has now become loss-making. Is that not something significant? Is that not something significant? The profit of the company has gone down. The company has become a loss-making. Yes, it has to be considered as MU. MU is something very significant, something very dramatic. I hope you know the meaning of the word dramatic. If something has dramatically changed, then it has to be considered as an MU. And if something has changed, but not dramatically, it will be considered as a doubt. Is everyone clear with the first two examples? I need to move ahead now. I need to move to more examples so I can quickly make another 5 minutes list on doubts in MU. But please remember the rule of thumb. Anything which is dramatically changing is a MU, and anything which is changing but not dramatically is a doubt. If it is a loss on the very first year, is it significant? Sam Joy, no. Obviously, in the first year of operations, you can have losses. Then that would not be considered as significant. But during many years of your operations, for the first time you got a loss will be considered as something very significant. Okay, more examples. Okay, let's take some more examples of it. MU, doubts. Okay, next. Company profit has fallen by 20%. Company profit has fallen, and in the last example, the company has become loss-making. Which is better? Which is more dramatic? Loss is dramatic, right? Loss is MU. But the company profit has fallen. Is that something of a doubt? Yes. Doubt. Perfect. Those of you are giving me doubt answers perfectly. Now, this is not dramatic. The dramatic is the loss making, right? Another example. Key customer has terminated. Key customer has left the company. Key customer has left the company. Key customer, emphasizes on key. Key is dramatic, but that means the customer takes most of your sales. Yes, the key customer is MU. Okay. The company has lost 3 of its 100 customers. Doubts. Perfect. Are you getting some track now? The panel, the attendees, are you getting some track? So if something is dramatically changing, that has to be considered as an MU. But if something is changing, but not dramatically, obviously it has to be considered as a doubt. 20% profit fall is not significant, Mohammed Shahrukh, if I compare that to a company converting from profit to loss. So what is MU, what is doubt has to be in comparison. The profit is falling, but if the company becomes loss-making, I think falling profit is a doubt, but the company becomes loss-making, against that is a significant, is a material uncertainty. Is everyone clear on that list? So is everyone clear on MU and doubts? So if there are doubts, what will you do? If the company is listed, what will you do with doubts? CAM, perfect. Okay, that's good. That's very good of your participation. Okay, let's take a step ahead now into the next thing. Okay, so that means you are now very clear on MU and doubts. So let me make one final picture. Now I hope this slide in front of you is very clear. If there is a MU which is disclosed, you will add MURGC. If there is a MU which is not disclosed, you will be modifying the report. But if there is a doubt, then you will add a CAM. Perfect. Let's find the next thing. Okay, now apart from knowing the MURGC, which is such an important area, let's find what is CAM. Please listen to me on CAM very carefully, because if you are preparing for March 18 exams, CAM is very important. I have a sense, a feeling that CAM is very, very important for March 18 exams. You might get a question on a listed company. You might get a question on listed company, and that could involve the use of CAM. So please be very clear when CAM will be coming. If doubt and not listed, here and then. If doubt and not listed, obviously that is not an equation for it. Doubts and listed. Doubts not listed can never be an equation. So that was my concern. Don't make your own formulas. Only make the formulas which is in the which is in the auditing standards. So the auditing standard says doubts and a listed company. It does not say doubts and a not listed company. So how can an examiner gives you that equation? Okay, let's find CAM. And is everyone clear with my words that CAM is very, very important for March 18 exam? So please take it very carefully. I'm making rules for CAM and I'll do an exercise with you on CAM. Unfortunately, the papers uploaded on ACCA website, because since these hybrid papers, the CAM question has not been uploaded yet, though it has come once in the past paper, but it is not the uploaded version. So in the absence of that, I had made my own question on CAM, and I'll be sharing that own question of CAM with you in the webinar today. Yes, the Fahad Shabir CAM has come in past paper, but the paper has not been uploaded. Okay, let's see what is CAM. It is imperative that the candidates can identify CAM that are required to be disclosed in the audit report, right? So what is the examiner saying you? The examiner is saying you should identify CAM. You should identify CAM that are required to be disclosed in the audit report. Identify from where? Identify from the case. So when you're reading the case as a student, it is imperative that you can identify the CAM which is to be disclosed in the report. And that case would be a case on a listed company, right? Okay. P7 question. P7 question may require a candidate to determine whether a transaction, whether a event, or whether a issue arising during audit give rise to CAM. So what can be in a case? It is saying P7 question may require a candidate to determine whether a transaction, event, or an issue arising during audit give rise to a CAM. So in a case, there could be a transaction. In a case, there could be an event. In a case, there could be an issue, which you have to identify, either that is a CAM or not. So is the examiner giving you a very clear focus what he expects from you? Augustine, 20% fall in profit. Why is that not a CAM? I'm just making a definition of CAM, so you will realize that 20% fall in profit. The 20% fall in profit was a doubt, right, Augustine? Sorry, 20% fall in profit was a doubt. So that was the doubt on the going concern. So if it is a doubt on a going concern, you will include that as a CAM. But wait for 5 minutes, Augustine. After 5 to 10 minutes, once I clear my CAM topic, I hope your query would get resolved very, very clearly. Okay, so a transaction, event, or issue in the case of a listed company can give rise to CAM. Is everyone clear with that? A transaction, event, or an issue in a case of a listed company can give rise to a CAM. Right? Now let's find some examples. Definition. The definition is very important, right? Concentrate on the definition. It says those matters that in the auditor's professional judgment were of most significance in the audit. Now, I hope being P7 students, it says were of most significance. Now, what most significance means? It's materiality, right? So if something is immaterial, can it bring a CAM? If something is immaterial, can it bring a CAM? No. So what's the first rule? For a CAM, the matter has to be significant. For the CAM, the first rule is it has to be significant. Right? So those matters that in the auditor's professional judgment were of most significance in the audit of the financial statements. Key audit matters are selected from the matters which are communicated to those charged with governance. Key audit matter, what's the first rule? The first rule is that the key audit matter has to come from significance, and the second rule is the key audit matters are selected from the matters which are communicated to those charged with governance. So what are two rules? First, it has to be significant, and second, it has to be selected from the matters communicated to those charged with governance. Can everyone see that definition very clearly? So is everyone getting the rule of thumb from the definition? What's the first definition? For a CAM, it has to be significant, true. For a CAM, it has to be significant, true. Please, Farooq Maqsood, Muhammad Amir, Augustine, all your queries on CAM will be addressed in 10 minutes. You will see yourself and your answer will be mitigated. Please hold on your CAM queries. It's too early putting these queries. 10 minutes and you will see your queries will be mitigated. Significant, and second is selected. Right? So let's do now an exercise. Just okay, CAM. CAM is equal to a listed company is equal to something which is significant matter and something which is selected from matters communicated to those charged with governance. Matters communicated to those charged with governance. Have we reached that point so far? Everyone agrees with that equation now. CAM is equal to a listed company, is equal to a significant matter, is equal to selected from a matter communicated to those charged with governance. Right? So that is exactly where we are now. Now, significant matters, 3. You got that from the examiner, right? Significant matters in terms of an event, significant matters in terms of an issue, significant matters in terms of a transaction. Everyone remembers that? The significant matter means event, the significant matter means issues, the significant matter means transaction, right? So significant matter. And what does significant means? Something which is material, right? And what's the second thing? It is selected. It is selected from the matters communicated to those charged with governance, right? Okay, let's take one step ahead now. What are significant matters? Has the ISA 701 given some examples of the significant matters which can be part of your exam paper? Yes, even the examiner in the article of CAM which you will be reading has given you so many examples of CAM. So please ensure that you have read the article very effectively. Okay, let's find the examples of CAM which you should be preparing for March 18 exam, which is in the article of the examiner. According to examiner, what can be a significant matter which can bring in a CAM? Significant matter. As per the examiner, the significant matter means high risk areas within the financial statement. High risk areas within the financial statement. Do we communicate high risk areas to management? Do we communicate high risk areas to management? Yes. So is high risk area an important matter of an audit? Is it meeting the definition? Significant and communicated. Significant and communicated. Okay, second, significant events, transactions within the year, even the subsequent events. Any significant event, I'll be giving you examples, wait for 5 minutes. Significant events, transactions within the year. And the last example, areas of financial statement that involve judgments. Now, any area which involves judgments, is that an important area? Is that an important area which involves judgment? Right? So the examples are important if you're preparing for March 18 exams. It is giving you a clue. High risk areas can be CAM. Significant events can be CAM. Significant transactions can be CAM. Subsequent events can be CAM. Areas of financial statement which involve judgments can be CAM. Right? Now, if you are clear with those three examples, I'm doing one final exercise and I'm putting a case of CAM in front of you because I want to see how you respond to a case on CAM, because that is very important for March 18 exams. I will give you 10 minutes to solve that CAM case, and after 10 minutes, I'll be asking your answers in the chat window. Okay, let's make one final definition of what CAM is. Okay, one last example, right? Suppose there is a significant matter. For example, significant transaction, significant event, right? Significant issue. For example, there is a significant matter, which is revenue recognition. Is revenue recognition a very important matter for the auditor? Yes. So suppose there is a significant matter, revenue recognition, but the auditor gathered evidence on revenue recognition and he thinks that the revenue recognition is wrong, and he concludes that the revenue recognition is right. If you think that the revenue has been wrongly recorded or the revenue recognition is wrong, will it lead to a modified report? If the revenue is wrongly recorded, will it lead to a modified report? Yes. Sarah Khan, why no? If the revenue is wrongly recorded, will that not have an impact on the report? If the revenue is wrongly recognized, will that not lead to a material misstatement? Yes. No, I'm waiting for Sarah Khan. Yes. Fine. Obviously, when it is wrong, how can you say no, right? I hope you're getting the right answer. Yes now, and twice yes. Okay. Conclude wrong. So will that lead to a modification of the report? Now, be logical. Yes, obviously, if the amount is material, Fahad Shabir. Revenue is material by amount. Revenue recognition. Revenue is the top line. How can it be immaterial? Conclude. So that means if it is a significant matter and the significant matter is being on the wrong side and the significant matter is a problem or significant matter is an adjustment, will that lead to a CAM? Will that lead to a CAM? No, if the significant matter, right, if the significant matter is a wrong issue, if there is an adjustment, suppose the management has not recorded a share-based payment expense. If the management has not recorded a share-based payment expense, will it lead to a modification or a CAM? right? If the management has not carried out a revaluation, will it lead to a CAM or modification? If the management has not carried out a revaluation, will it lead to a CAM or a modification? For any negative things, CAM cannot come, right? For negative things, CAM cannot come. If the examiner says share-based payment expense has not been recorded, you cannot put CAM. If the examiner says revaluation has not been recognized, you cannot put a CAM. If the examiner says deferred tax liability has not been recorded, you cannot put a CAM. If the examiner says the adjusting event has not been adjusted, you cannot put a CAM. If the examiner says the non-adjusting event has not been disclosed, you cannot put a CAM. So CAM cannot come for negative things, right? If there is a negative thing, it will lead to modification. Is everyone okay on that? If there is a negative thing, will it lead to modification? Yes. So for a negative thing, can we write a CAM? No. So please make your mind very clear. If the company is listed and the matter is negative, you cannot include a CAM. If a company is listed and the matter is positive, then you can include CAM. See this. Giving you one last example. Because there are so many myths with CAM and so many myths you keep making on CAM. Let's do one final example. I think this will clarify, and I need to put a question in front of you which is very, very important. CAM. First condition, CAM, it has to be listed company. Now, if CAM is in a listed company, suppose you communicate an issue to those charged with governance, and the management resolve the issue, and the management unresolve the issue. Now, if you communicate a problem to management, suppose you go to the management and you tell management that the revenue is not rightly recorded, and the management says, okay, I rectify it. And you go to the management and say, no, the revenue has not been recorded. And the management says, no, I'm not adjusting it. Can those be the two outcomes? If you go to the management might resolve the problem and the management might say no. Can that be the two outcomes if you go to the management generally? Now, if there is an issue and the management resolve it, will that resolution make the issue positive? And if you go to the management and the management says, no, I am not resolving it, will that lead to the issue becoming negative, and the negative issue becomes modification, depending upon the materiality level? Please listen. Please visualize the flow chart. If you communicate a problem to the management, can the management resolve the problem? If they resolve the problem, will the issue become positive because they have resolved it? And if the management fails to resolve, will the issue lead to modification? Yes. Okay. Now make a rule. CAM is for a listed company. Communicate an issue. And if the issue becomes resolved, it's positive. And if this issue was significant, obviously it's very logical that you communicate significant issues to management. You don't communicate insignificant issues to management. If you communicated a significant issue to the management, is that meeting the definition? Significant issue to communicated to management. And if the significant issue communicated to the management becomes resolved, it becomes positive. Positive is equal to, I hope you're clear, because this is a final formula now. If there is a significant issue The significant issue will first be communicated to the management. True? A significant issue will first be communicated to the management. Is that true? Significant issue will first be communicated to the management as a rule of thumb. Is that true? And if a significant issue is communicated to the management, can the management resolve it or not resolve it? Can we expect both the outcomes? Can we expect both the outcomes? Yes. But if the management resolve it, will it become something positive? And if it becomes positive, then that is a CAM. That is perfectly a CAM in a case study. That is perfectly a CAM in case study. I hope I cannot make much refinement of the formula now. I hope this refinement is working with you. Muhammad Amir, that is exactly what I need to answer. Wait for 5 minutes. Muhammad Amir, I'll address you once I answer. But just wait for 5 minutes. Okay, and if you communicate a significant issue to management and the management is unwilling to resolve it, will that lead to modification? So is everyone clear with the flow chart right in front of your screens now? Will you do blunders now with CAM? I hope so. I hope that no remains no in the exam paper as well. Okay, one final structure, and let's see how would you react on a case, because so many no's coming in. That means all of you are saying we will not make blunders, but let's see how you go down with my case study just in next 2 minutes. Okay, now for everyone, right? This is one final exercise I'm doing on CAM. CAM is for a listed company. How many times I've written that now in the session so that it is emphasized. It is for a listed company. Then next, the matter has to be significant. And does everyone know the matter? The matter can be a transaction. The matter can be an event. Sharmila Siddiqui, if the matter is significant, obviously it has to be communicated to those charged with governance. I didn't use the word management. You are using the word management. Obviously, if the matter is significant, it does not go to the management. It goes to those charged with governance directly. If the matter is insignificant, then it goes to the management. So TCWG is the board of directors, is the audit committee. Please have common sense of raising questions. Okay, so the matter has to be significant, and everyone know what matter is? Yes, matter is event, transaction, or event. Perfect. Okay, second, the matter has to be significant and it must have been communicated to those charged with governance. Sharmila Siddiqui, those charged with governance. The matter has been communicated to them. Okay, matter is significant and the matter has been communicated to those charged with governance. Third, the matter has to be resolved, or the matter has to be positive matter. If it is a significant matter, if it has been communicated to the management and it has been resolved, this plus this plus this plus this is equal to CAM. Is everyone clear on that? Listed plus significant plus communicated plus resolved is equal to CAM. I cannot make a much more crystal clear formula on that. Listed plus significant plus communicated plus resolved is equal to CAM. Okay, now if you think you have got my formula crystal clear, let's see how you react to my case study. Okay, I'm putting the case in front of you. I still need to clear the query of Muhammad Amir on going concern. Doubts over going concern, Muhammad Amir. I still have that in mind. I'm coming down to that. Muhammad Tahir Ansari is saying a nightmare brought down to a simple formula, sir. Thank you very much. Obviously, that is exactly the purpose of this webinar being organized by ACCA, that your nightmares are converted to optimism, your pessimism is converted to optimism, and that's exactly the purpose of this webinar being conducted. I hope you have started to feel the optimism for 5th of March rather than pessimism for the 5th of March. How many of you are optimistic now for 5th of March before I put the question in front of you? Yes, Abdul Manan, this is a scoring topic. I'll be winding up many things at the end of the day today, which is such an important day because we have a last day briefing day tomorrow. Okay. These are very few students who are saying very optimistic. I am too, me too, optimistic about it now. I need more optimisms. Okay, that's good enough, right? Okay, start reading the case in front of you now. You must be having this resource provided to you by ACCA, the case on audit reporting, which is right in front of you. Please read it. I'm giving you 5 minutes. Read it and remember the rules, right? What are rules? Listed, significant, communicated, resolved is equal to CAM. See if you can apply the 4 rules to this case. Start reading it. After 5 minutes, I'll interact. I hope you have this case with you and you can scroll the case down, screen down. Okay, let's resume. I hope you've read this case, and I will emphasize on the conditions we just did to get through down. This question is an emphasizable question on CAM. Okay, let's go up and start reading one by one. Okay, let me first have my editing tools. Okay, that's perfect. Now let's start with the emphasis. ABC is a listed company. So is that the first thing we should pick in the exam paper? Rule number 1? Is that the first rule we should pick? I now need your participation in the order of the question I'm putting in. Just hold your questions for 5 minutes and just be on the case and just respond to my yes and no answers there currently, so that this case becomes effective and we exit from it. Okay, so the very first thing we look for in the exam paper is the company is listed. Now when we know the company is listed, will I have CAM in my mind attempting the question? Yes, okay, rule number 1, second, perfect. During the planning stage, the auditor identifies several risky areas within the financial statement of the company, such as revenue recognition, fair values, and impairment of assets. So are those areas important? Revenue recognition, fair values, and impairment of assets? Because those are risky areas, right? So should the auditor be including revenue recognition, fair values, and impairment of assets in CAM? Because the examiner or the ISA 701 was telling us risky areas is also CAM. So the risky areas such as like revenue recognitions, the risky areas like fair values and impairment of assets, should they be included into CAM because they are significant, right? Perfect. Okay, let's go one by one down. During the audit of the financial statement, the audit team gathered sufficient appropriate audit evidence, including detailed substantive testing on revenue recognition, on fair values, and impairment of assets, and concluded that each of the matter was correctly treated by management. So, is that something positive? The revenue recognition is right, the fair value is right, the impairment of asset is right. Have we gathered evidence on that? And have we concluded all of them are right? And the company is listed? So will all 3 of them be included in CAM? Okay, moving down. Further, during the year, there was the auditor was informed by the management of a significant litigation filed by an ex-employee who is claiming 10 million as damages. Now, how much is the profit of the company? 30 million. So is 10 million material? Yes, and it's already written in the case. It's significant litigation. The audit team performed procedures on the litigation and concluded that the litigation has a possible outflow, and the disclosure given by the management is adequate. Is again that something, is that positive? The disclosure has been given. Had it not been given, then it would have been. Had the disclosure not been given, then it would have been modification. But had the disclosure been given and the company is listed, so will I include this in my CAM? Yes. Okay, next. During the audit, the auditor identified that the car was sold to a finance director amounting to 50,000, but no disclosure was made. Now can I include a car? Now can I include the car sold to director as my CAM? Should I include the car sold to director as my CAM? No, because no disclosure has been given. So 50,000 is material by nature, right? 50,000 is material by nature. That is a related party transaction. 50,000 is not material by amount. 50,000 is material by nature because that is a car sold to a finance director. So the disclosure has not been given. So will I include a CAM? No, this will lead down to modification. Okay, next. The chairman statement. The chairman statement attached with the annual report was read by the audit team, and the audit team concluded that there were no material inconsistency. What should I do for other informations? What should I do with other informations? The chairman statement was read and the auditor is concluding there is no problem in the chairman statement. Please remember, CAM only relates with the matters in the financial statement, right? CAM does not relate with other information. So CAM only relates with the matters in the financial statement, right? So is this a financial statement matter, the chairman statement? Is the chairman statement a financial statement matter? No. So will I include a CAM for it? No, I'll include this in other information. I include this in other information. Will I include this in my CAM? No, because this is nothing relating with the financial statement. Okay, lastly. Further, during the year, the management changed the useful life of the property from 20 to 25 years. The audit team have evaluated the management assumption and its basis and concluded that the increment in the useful life is correct. Is again that something positive? Change in the useful life and the auditor agreed that the useful life is very correct? Is there any disagreement with management? Is there something negative in that? So if this is a positive thing, is a change in useful life something important? Is that something significant? Yes. And is that positive? Is that positive? Yes. So will I include this in my CAM? Perfect. Okay, the last one. ABC company applied IFRS 8 for the first time because it became listed during the year. The audit team gathered sufficient appropriate audit evidence on the adequacy of the disclosures given and concluded that the disclosures are adequate. So is that something positive? They have applied the IFRS 8 for the first time. Applying something for the first time, is that something significant? Yes. And is that positive? That the disclosures have been made? Yes. So will I include my CAM here? Is everyone crystal clear now? If a question comes in March 18 which says the company is listed, please think about that a listed company can have a CAM provided the conditions are met. What are conditions? The matter has to be significant. The matter has to be positive. The matter has to be significant. The matter has to be positive. Will a CAM come for negative things? Will a CAM come for negative things? No. Will a CAM come for non-listed company? Will a CAM come for non-listed company? No. Okay. Will CAM come for insignificant things? Will CAM come for insignificant things? No. So is everyone crystal clear on the rules now? Is everyone crystal clear on the rules now? Okay, that's perfect. That's very, very good. The results from these attendees is now making me happy as well, that all of you are getting a crystal clear knowledge, which is exactly the objective. And that's exactly what you should be gaining from this session. Perfect. Okay. Now, having done all this big exercise here, let's move to one final conclusion now. Obviously, the answers will be shared on the WhatsApp group. Please, all of you, I'll share once and final my WhatsApp number today at the end, and I'll tell you how would you participate in the WhatsApp group. I will put all the resources on the WhatsApp group after the Saturday session tomorrow. So you can get everything. Don't worry about that. And after tomorrow, you can start to study effectively for P7. Okay, is everyone clear with this? Can I move back to the presentation and make one final thing? Is everyone clear on CAM? Okay. Now, just 5 minutes ago, just 5 minutes ago, there was a question from Muhammad Amir who asked the CAM case from doubts. We came across a situation today which says doubts over going concern, but not MU. Everyone remembers that? Doubts over going concern, but not MU. Yes? And the company has to be listed. And have we included that in CAM as well? Now, a lot of queries were, why? See, my formula was what? It has to be significant, it has to be positive, it has to be listed. So my first formula says it has to be listed, tick. My second formula says it has to be significant. Anything which relates with going concern is material by nature, whether that is doubts, whether that is a material uncertainty. Anything which relates with going concern, whether they are doubts, whether they are material uncertainty, is considered material by nature. So these doubts here is something which needs to be considered as important, is something which is to be considered as material by nature. Though they are not material uncertainty, right? But still we have to give significance to doubts because they hit the going concern. Okay, so the company is listed, the doubts are important. Doubts are important to whom? The doubts are important to the shareholder. The doubts are important to shareholder. If you are a shareholder of a company, would you like to be informed about the doubts? If you are a shareholder of the company, would you like the auditor to inform you about the doubts? Will that help you as a shareholder? Will that benefit you as a shareholder? If you are a shareholder of a listed company, would you like your auditor to tell you about the doubts? Will the doubts help you? So is that something positive for the shareholder? The doubts? Is that something positive for the shareholder? Doubts? Yes? See one thing. These doubts which you are reporting in CAM is something positive for shareholder. And the shareholder would appreciate that. These are positives for shareholder. Because a lot of students say, doubts are negative. How are we including this in CAM? No, doubts are positive because they're helping the shareholder. They're helping the shareholder at a very early stage. They're helping the shareholder at a very early stage to know about the future of the company. I hope you're getting my sense of positivity with doubts. Is everyone becoming clear with the positivity with doubts? Is everyone becoming clear with the positivity on doubts? Are you getting my sense of positivity on doubts? So if you are a shareholder for a company, these doubts are positive or negative? Positive. Okay, one last angle. See, if there is a doubt about going concern, which the management failed to address, can I say if there is a doubt which the management fails to address, this doubt can become MU in future? Is that true? If there is a doubt on going concern and the management fails to address the doubt on going concern, will that become a material uncertainty in future? If the profit is falling by 20% and the management is not taking any action on the profit is falling by 20%, after 2 to 3 years, the company can be loss-making. Is that true? So if the profit is falling by 20%, that was a doubt, right? But if the management is not taking any action on the profit is falling by 20%, will after 2 to 3 years the company can become loss-making? And the loss-making is what? Material uncertainty. So doubts are what? Doubts are early warnings. I'm giving early warning to shareholders. Doubt is an early warning to shareholders. So is early warning positive or is early warning negative? Is early warning positive? Is early warning negatives? So am I deviating from my rule? Abdul, I cannot remember the name. I think Muhammad Amir was the person, right? Am I on my rules? The company is listed, rule number 1. The doubts are important, the rule number 2. And the doubts are positive, the rule number 3. So should I include the doubts over going concern in CAM? Is that clear to everyone on CAM? I've spent time on CAM because it is important for March 18. I will only spend time in webinar on only the things which are important in March 18. Rest, you have all the resources with you. But I want to emphasize on areas which I believe can be part of a 100 marks question on the 5th of March. Is everyone clear? Please, one thing, don't make your own myths and stories on CAM. You will spoil it. You will spoil it. Stick to rules. Stick to rules. I tried making a clear formula of CAM. I cannot make a much better formula of CAM. I cannot make much better formula of CAM. I hope you appreciate that formula, and I hope you like that formula and can make your life easier. Can make your life easier for your exam papers. Please be in that formula. And if you keep the formula in front and you say, what if this, what if that, what if this, and what if that, you are spoiling it. You're spoiling it badly. So is everyone clear? One last quick answers from you. CAM will come for listed companies. Is that true? Okay, CAM will come for significant matters. And the significant matter has to be positive. So when all 3 conditions are met, will that be a CAM? So is everyone clear why doubts are not negative and why doubts are positive? Because there were a lot of questions on that. Why are doubts a CAM? Why are doubts a CAM? So doubts are not negative, doubts are positive, doubts are positive, doubts are positive. So thank you, Muhammad Amir, for that comment. That was exactly your question, and I spent good time answering your question, just not for you, but for the others as well. And I hope everyone is now crystal clear on that. Okay. So I'm exiting now from this CAM topic. One last thing, I have to do something which is now very, very important for a question in March 18. Please listen to me very carefully now. All of you know that this reporting question which we are doing today comes in question 5, which is the section B, right? And this is static. In all settings, the question 5 is reporting, right? Right? So now one student can leave question 5 on choice. One student can do question 5 taking it as a choice question. If you ask me, I'll say you should attempt question 5 because question 5 is all about rules. And if you are clear on rules, then question 5 is a scoring opportunity. If you are unclear on rules, never pick question 5. Never pick question 5. If you are clear on rules, pick question 5. I made CAM rule clear. I made the MURGC rule clear. And I still have to make clear rules for opinions, which is the one last thing, and a critical appraisal. So when will you attempt question 5? When your rules are clear. Scoring opportunity. Now remember one thing. For March 18 exams, first of all, for March 18 exams, something which is important is to know CAM. We have done that. Something important for March 18 exam is to know how to do a question on critically appraise the report. I believe that itself is very important. critically appraise the report. I'll be starting that now till the end of the webinar. Critically appraise the report, because that is the second very important thing for March 18 exams. And the third thing, where I will be spending time just prior to this namaz break, and our post namaz break, I would going down with the critical appraisal opinion. IFRA, it was tested in September 17 exam. That was for the review report. The critical appraisal in September 17 exam was for the review report, I guess. But I'm still believing a critical appraisal on the audit report sounds very important for the upcoming exams in March 18. Right. I hope you trust your tutor for making probabilities, rather students making their own probabilities. Okay, one last thing, starting off with critical appraisal. So 3 things important, right? For March 18 exams, we have emphasized on CAM. I'll come across the critical appraisal in next 10 minutes, in next 20 minutes rather. I'm starting with this first quickly. Let's make quick rules on opinion. Okay. Please see this slide. All of you must be having this slide. It's on your screen as well now. This is a slide which addresses the opinions. This is a slide which addresses the opinion. This is a slide which addresses the opinion. Now, I hope you know this from your exams, from your prior knowledge. There are 3 opinions: qualified, adverse, disclaimer. There are rules. Remember the rules. Make rules. If the financial statements are materially misstated, suppose the share-based payment expense is not recorded, the revaluation has not been carried out, the impairment has not been carried out. If something is negative, we say the financial statements are materially misstated. If the disclosure has not been made. Now, if something is negative, that means the financial statements are materially misstated. Is that true? So if the financial statements are materially misstated, if they are material but not pervasive, then you will issue a qualified opinion. And if it is material and pervasive, you will issue an adverse opinion. Now, I have to give you a difference, what is material and what is pervasive. But if the financial statements are materially misstated, you will issue a qualified opinion. If the financial statements are pervasively misstated, you will give an adverse opinion. And I hope you can pick the misstatement, right? The misstatement means that either the revaluation has not been carried out, the share-based payment expense has not been recorded, etc. One last thing prior to the mass break, so that this structure gets off and we come back with exam papers. When the auditor is unable to obtain evidence, but that evidence is material, the auditor will issue a qualified opinion. But if the auditor is unable to obtain evidence which is pervasive, the auditor is unable to obtain evidence which is pervasive, the auditor will issue a disclaimer. So you're taking a namaz break, but just a quick recap. If the financial statements are misstated materially, you will issue a qualified opinion. If the financial statements are pervasively misstated, you will issue an adverse opinion. If the auditor is unable to obtain evidence which is material, then a qualified opinion. If the auditor is unable to obtain evidence which is pervasive, then a disclaimer of opinion. Now, the only one thing I need to make clarified after the namaz break is what is material and what is pervasive. I make rules. We exit from it and we start a question on critical appraisal. And I think we'll have a good enough time to do one good question on critical appraisal in the session today. Right? Is everyone clear with this? Please keep visualizing this slide in front of you. I'm taking a namaz break and we'll be right back in 10 minutes. Taking a namaz break. It's 8:15 the local time, Pakistan Standard Time. We'll be meeting back at 8:25 p.m. In that time, please revise whatever you have learned. Okay, welcome back. Post Navas break. Just a quick 5 minutes on the disclaimer, qualified adverts, and then we're taking an exam paper on a critical appraisal. Please remember the rules. The rules have to be very clear. I just need to make you one thing very clear where I normally seen students struggling a lot. Okay, some areas where I have seen students struggling a lot is to know very clearly, very clearly what is material and what is pervasive. Okay, let's draw a line. Now, how in an exam paper, obviously it's easier to judge what is material because you're so obsessed with that. Something is material if it is half to 1% of the revenue, right? Something is material if it is 5 to 10% of the profit. And I hope you know these numbers are given in the exam paper, right? In any question, wherever you have to determine the materiality, the examiner will give you the number of profit, the revenue, so you know how to divide it, right? And then it is 2 to 5% of the total assets. There are two rule of thumbs. You can use any one in exam. Some says 2 to 5% of the total asset, or some says 1 to 2% of the total assets. I normally stick to the first one, 2 to 5%, but I think a lot of students have that 1 to 2 in mindset. So if you have that, stick to that. No worries, because both are acceptable. 1 to 2, 2 to 5. So up to you, right? I normally recommend 2 to 5. So it's up to you. So you should know what is material, right? And I hope you are very familiar with these thresholds right in front of your screen now, right? Now, what makes something pervasive is something very, very important. What makes something pervasive is, I have seen so many students who conclude on pervasiveness too early. A lot of students will say, okay, 5 to 10% of the profit is material. So if anything is like 15% of the profit, that's pervasive. 2 to 5% of the total asset is material. Okay, if anything is like 7% of the total assets, 8% of the total assets, that's pervasive. No, pervasive means something which is very, very significant. So as a rule of thumb, and within the limitation of the time we have in webinar, obviously in my classroom I do explain that in very depth, but just to cut short and give you one very clear rule is that if something is equal to or plus 60% of the revenue, then that will become pervasive. If something is equal to or plus 60% of the profit, will become pervasive. If something is equal to or plus 60% of the total assets, will become pervasive. 60%, not less than 60%. So if in an exam paper, that means half to 1% of the revenue is material, up to how much? Up to 59%. So see the range of materiality. 5 to 10% of the profit up to 59%. 2 to 5% of the total asset up to 59%. But 60 makes it pervasive. Yes, Osama Sabir, 60 is too high, but that is exactly pervasive definition. Pervasive says something which is significant, and something significant means it has to be more than 2/3 or near 2/3. So you cannot make something significant as at exact 50. To make something significant, you have to be 60 plus. And that has been a very consistent definition of the examiner in the past paper. That has been very consistent. No, these percentages are not defined by IFAC. These are market practices of the Big Four firm, and that is part of your P7 paper. So examiner past papers really sets the tone. Examiner past papers is 60 plus for pervasive. I've never seen examiner exercising pervasive under less than 50%. So be very clear with that. Be very clear with that. So anything which is in excess of 60 is pervasive. So whenever you find a percentage in exam paper and you think something is in excess of 60%, then you have to make it pervasive. Not 50% for Farooq Maqsood, not 50, 60, pervasive, something which has a significant impact, right? So obviously we don't have much time for that, but just to make you very clear, it's a blunt 60 and plus. It's a blunt 60 and plus, right? Okay, so if something is material, qualified. If something is pervasive, adverse. And if there is an unable to obtain evidence, if you're unable to obtain evidence, then that means qualified for material and disclaimer for pervasive, right? Okay, now let's do one question on critical appraisal, which is very, very important. If you look at the exam questions on this is the June 14 question number 5, June 14 question number 5. Right, June 14 question number 5. I'm doing it for the topic critical appraisal. June 14 question number 5. See the requirements of this question, which is something very, very important, which can strike back to the March 18 exams. See this. Critically appraise the proposed audit report. Critically appraise the proposed audit report. Now, please remember one thing. Look at the marks, something we have been doing yesterday. Plan the answer first, and then attack. Critically appraise the proposed audit report for every critical appraisal. For every critical appraisal. For every critical appraisal, you have 1.5 marks per appraisal. So 12 divided by 1.5 is equal to how much? 12 divided by 1.5. I know the answer, but I want your enthusiasm. 12 divided by 1.5. How many appraisals will I be carrying on? 12 divided by 1.5 obviously is 8. So we'll be carrying out 8 appraisals. 6 Ifra Anjum. 12 divided by 1.5 is 6. 12 divided by 1.5 is 8. So how many appraisals will be doing? 8 appraisals divided by 1.5, right? Now try to understand the meaning of the word critical appraisal so that we can apply that to a case study, right? Okay, let's understand the meaning of the word appraisal. Okay, the content is on my slides, so please do ensure that you're reading it. There is many things in my slides within which I didn't address considering its importance to the session. Okay, critical appraisal of the report. What will you do? Now you know critical appraisal carries 1.5 marks. Now be realistic. Critical appraisal carries 1.5 marks per appraisal. Now, exactly what is the meaning of the term critical appraisal? When the examiner asks you, critically appraise the report, I've seen so many students only criticizing or critically appraising the opinion. Examiner is not saying critically appraise the opinion. Examiner is saying critically appraise the report. Report includes opinion. So you have to be very clear. When the examiner says critically appraise the report, you have to do the broader exercise, not just criticizing the opinion. You have to look at the report itself. Okay, now I tried making some structure for your ease. If I'm critically appraising the report, I will first see who prepared the report. Was the report prepared by the manager? Or was the report prepared by the senior? Who should prepare the report, manager or a senior? Who should prepare the report, manager or the senior? Manager. And if the senior is preparing it, will I criticize the senior? If the exam question says the senior is preparing the report, will I criticize the senior for preparing the report? And is there a chances of errors in the report if the senior has prepared it? Right? So if the senior prepares the report, will I find it as my critical appraisal and I will criticize that the senior cannot prepare the report, right? Second, I will critically appraise the report for its format and structure. There might be something wrong in the format. For example, in the March 18 exams, the examiner writes the basis of opinion first and opinion after. Is that right or wrong? The examiner writes basis first and opinion after. Is that right or wrong? That's wrong. So will I tell the examiner the opinion will come first and the basis will come after? Opinion will come first, basis will come after. So I have to be critical of the format of the report. I just shown you the format at the start of the topic 5, the listed company format and the non-listed company format. So please know the format. Please know the format. Please have a rote learning of the format. Please know the order of the format. What comes first, what comes second, right? Then a critical appraisal of the wording. There might be something wrong in the wording. When you start reading the report, you might find that there is something wrong in the wording. And if you think there is something wrong in the wording, you have to find that as a problem. You will say, no, this is not the right wording. This is not, suppose the auditor is using the word guarantee, not assurance. Is that a wrong wording? Can we use the word guarantee in the audit report? No. Can we use the word assurance? Right. If the auditor is saying in the report, I have verified 100%. I have verified 100%. Is that wrong? I have verified 100%. Is that wrong? Because audit is done on a sampling basis, not 100%, right? So you need to find some problems in the wording. Missing information. There might be something missing in the audit report. For example, the auditor is not writing in the report the reference number of the IAS. Suppose in the audit report, he's talking about the tangible assets, intangible assets, but he's not saying IAS 38. So there might be something missing. Missing itself is a problem. You might think that something is missing in the report. I'll just take you back to the question, right? So to tell you exactly what this is. And the last appraisal. Opinion. It is possible that the question on critical appraisal has the right opinion. If you think the opinion is right, then justify why it is right. You will take 1.5 marks. So not a lot of student thinks that every time the opinion will be wrong in a critical appraisal. What if the critical appraisal opinion is right? You will justify why it is right. And if it is wrong, you will justify the right opinion. You will tell examiner what is the right opinion if you think this is wrong. Will this help you? When you're reading the case, first see who prepared it, then see the format, then see the wordings, then see the missing information, then see the opinion. And everything you do is taking 1.5 marks. Is that clear? It's one of a good question in P7 on critical appraisal. It's a scoring question provided that gets to your exam setting, right? Now let's go back and see exactly what we have done. Okay, I take you back to the question we were on. Critical appraisal, right? Okay, now this is an old question, right? I am solving it as per the new report. I'm solving it as per the new report. Okay, in my case, see who has prepared the report. The report has been prepared by the Smith. Smith has produced the report. And I think it's written in the question above that Smith is a senior. Smith is a senior. I think that's written up. So Smith is basically the senior. So will I criticize Smith? Will I say Smith is not the proper person? Right? So Smith becomes my first 1.5 mark. Second, it says basis for opinion and disclaimer of opinion should basis come first as per the new report? Should basis come first? As per the new report, no. Opinion should come first, basis should come after. So is that wrong? Is that wrong as per the new report? Will I criticize it? Right. Will I criticize it that basis will come after, opinion will come first? Is that so as per the new report? Yes. Okay. We have performed our audit based upon a materiality level of 1.5 million. Is that wrong? Is that wrong? Can we give materiality level in the report? Is that wrong? Yes. So is that something of a criticizable effect? Our procedures have proven conclusively. Is that the right wording? Proven conclusively? No. We do work on sample basis, right? Not proven conclusively. So proven conclusively is wrong. That trade receivables are materially misstated. See, something is missing. Trade receivables are materially misstated. But is there something missing? By how much? Trade receivables are materially misstated by how much? Right? So is something missing? Will I criticize that? Right? No, practically things are very different, Mohammed Shahrukh. As per exam, manager should prepare a report and the partner should review it. The manager should prepare a report and the partner should prepare it. Review it, sorry. The partner should review it. Okay, the finance director has refused to make an adjustment. Can I refer to finance director in my report? Right? I should have said the management, right? I cannot say the director, the finance director. I would have said the management. I cannot say the finance director. So is that wrong? Naming the director, putting the director, right? Okay. Significant trade receivable balance. Is something missing? Significant trade receivable balance. If something is missing here. Yes, significant amount. So if something missing here. Right. See how many critical appraisals? Then you say, therefore, in our opinion, the financial statements are materially misstated and we therefore express a disclaimer of opinion. Therefore, in our opinion, therefore we express a disclaimer of opinion. Can you express an opinion in a disclaimer of opinion? Can you express a disclaimer? Can you express an opinion in a disclaimer of opinion? No. So is he expressing an opinion? Therefore, in our opinion, is that wrong? Yes. And first of all, should a disclaimer come? Should a disclaimer come or not? See. Should a disclaimer come or not? Should a disclaimer come or not? How much is the profit of the company? The profit of the company is 11 million. The profit of the company is 11 million. And how much is the receivables? 2.5. So if you divide 11 with 2.5, how much is the percentage? 22.7. Good. 22.7%. So is 22.7 material or pervasive? Material, right? So 22.7 is material. So is the financial statements materially misstated or the auditor was unable to obtain evidence? The financial statements are materially misstated, right? Because the bad debts are not recorded. So is disclaimer right or wrong? What should have come? What should have come against disclaimer? What is the right opinion? You just look at the grid. What is the right opinion? Perfect. The right opinion is qualified. Perfect. Perfect. Please see my answer to how to answer a question on critical appraisal. The answer is attached with this handout. It is very easy to write an answer on critical appraisal, but you should see my way of answering a question so that you know how much you're writing for 1.5 marks. But I hope you're getting a sense of a critical appraisal, that a critical appraisal includes either who prepared it. A critical appraisal means the format, the wordings, something missing, and then you need to justify whether the opinion is right or wrong, and so on and so forth. Are you getting some sense of critical appraisal? Are you getting the structure clear of critical appraisal? Okay. Now moving back, one last thing. Emphasis. A lot of student tends to get confused with emphasis. I just need to put 5 minutes on the emphasis and then go down with a winding up in 10 minutes. And the winding up today is very important, right? So please listen to winding up of the last 10 minutes. Just a quick 2 minutes on emphasis. Will emphasis come in listed company, non-listed company? Quick. Will emphasis come in listed company, non-listed company? Non-listed. Perfect. So will emphasis come in listed company, non-listed company? It will come in non-listed. Okay. What are rules? What are rules for emphasis? The matter is material. The matter is material. So that is the first rule. Will you give emphasis for something immaterial? Will you give emphasis for something immaterial? No, because E means emphasis. E means material. Emphasis, material. The matter is material and correctly disclosed in the notes to the financial statement. So what are two conditions? The first, the matter has to be material, and second, it has to be correctly disclosed in the notes. It's not saying adjusted, it's saying disclose. I think all of you are accountants. Disclosure and adjustment. It is saying disclosure. Disclosure comes in the notes. Disclosure comes in the notes. So if the matter is material and it is correctly disclosed, are those two conditions important to write an emphasis of a matter paragraph in exam paper, provided the company is non-listed? See, emphasis sounds like positive. The matter is correctly disclosed. Emphasis cannot come for negative things. Emphasis will come for positive things, but the company has to be non-listed. Okay, let's make a quick rule now. I think that was one of the requests coming from a lot of students. Explain what emphasis is. See, I'm doing one quick exercise. Emphasis of a meta paragraph. It will come for a non-listed company, so be careful with that. Suppose there is a contingent liability. I hope all of you know what a contingent liability is. There is a contingent liability of $1 million. Of $1 million, right? And this has been disclosed. And this has not been disclosed. If it is disclosed, the profit before tax of the company is $10 million. And the profit before tax of the company is $100 million. Tell me quickly, the contingent liability of $1 million. Do contingent liability requires a disclosure? Do contingent liability requires a disclosure? Yes. Now, what is the rule of thumb? The contingent liability has been disclosed. But should it be material? So is 1 million material to $10 million? Is 1 million material to $10 million? Yes. So should I write an emphasis of a meta paragraph in the first company? Will I write an emphasis of a meta paragraph in the second company? No emphasis. So please remember the rules. The matter has to be material and the matter has to be disclosed. So $1 million for a $10 million company is material, $1 million for the $100 million company is immaterial, even though it has been disclosed in both the circumstances. But if the matter has not been disclosed, will I give emphasis? If the matter has not been disclosed, will I give emphasis? No, that will lead down to modification, right? It's negative. Okay, so I hope you are clear with these rules within the limitation of the time. The rest matters. I tried emphasizing again on the core reporting areas which are important for March 18 exams. Rest is all in your slides to go through. I just want to make a very important conclusion today, because we're meeting tomorrow for a mock debriefing. Beyond a mock debriefing tomorrow, I need to set the agenda. Now I have a good 8 to 9 minutes, and I just want to utilize them for a proper winding up. Let's do something very important, what we've gone through today. Okay, again, I need your participations. Now this last 7 minutes is for you, right? The class timings tomorrow is 2 to 4 p.m. Pakistan Standard Time. 2 to 4 p.m. Pakistan Standard Time. That is Saturday tomorrow. 2 to 4 Pakistan Standard Time. Yet it's only 2 hours because it's a mock debriefing. It's a mock debriefing, right? So it's only a 2-hour session tomorrow. Okay, recap. Now, tomorrow, on Saturday, please listen carefully, because then I need your participation tomorrow. On Saturday, which is tomorrow, 2 to 4 p.m. Pakistan Standard Time. What is the agenda? The agenda is to tell you how to handle 100 marks paper in 3 hours. Number 1. Second, how to choose optional questions. Number 3, how to gain 4 professional marks. I hope all of you know the 4 professional marks in the question 1. Then next, tomorrow, we would also work upon high important areas for March 18 exams. High important areas for March 18 exams, and that will reveal the suspense, right? For which you had shown a lot of patience since Monday. A high important area for March 18 exams. So it's not just a mock debriefing. I'll put a 100 marks question in front of you, and it will tell you how can you execute that in 3 hours. How to choose optional questions, how to gain 4 professional marks, high important areas, and also want to tell you how can you find opportunities. How can you find opportunities to be 50 plus, which is so very important for you, right? So is that a very important agenda for tomorrow? That is exactly like an icing on the cake. The cake is ready, but just before we eat it, let's have an icing on it tomorrow, because otherwise things will not sound as effective as they should be. So the agenda tomorrow is very, very important, and I need your enthusiasm and your participation, which is utmost important for the agenda tomorrow. Okay, one last thing apart from this agenda for tomorrow is to know that a lot of queries have come in. Please ensure that my WhatsApp is 923382383442. My email ID is kashifkamran@gmail.com, because I would not have time to do this tomorrow. And again, you can be accessible to me on my Facebook, where my account details is Kashif Kamran. So these are all details you can explore to reach me, because that has been something repeatedly been asked to me, right? Okay, tomorrow is a very important day. You will really benefit if you attend the 2-hour session tomorrow. It's beyond the mock paper, and just give me a quick feedback. I think in the first 5 minutes tomorrow, I'll do a quick reporting recap, and quick reporting recap will be having an hour and 55 minutes to spend on planning the P7 paper, which is such an important area. Okay, I have 2 to 3 minutes. I want to take that opportunity. How was the session today? How many of you have got clarification on reporting? How many of you have got clarification on reporting? Okay, and have this concept building today helped you? Have this concept building today helped you? And was it a beneficial session today? Was it a beneficial session today? Okay, now that is exactly the objective, to benefit you. The ACCA Pakistan has organized these webinars for your interest and for you to get passed in the ACCA exams. And it is so nice meeting all of you on a daily basis, and looking at this chat window shows so much enthusiasm coming from your side. It has been so diversified panel, so diversified attendees from across the world. It was so good to be interacting with you, listening to your query, and not listening, rather looking at your queries on the chat window. And really, it was good interacting with you. There are so many repeaters. Please find your weaknesses and get through. Please find your weaknesses and get through. You need to be good. You need to be good. You need to implement. You need to strongly implement, right? So please be assured of that. And it was nice communicating with you so far. And I hope we have a wonderful day tomorrow, which is a very, very important day, right? I wish you all the very best of luck for your P7 exams, and we'll meet for one final discussions tomorrow, which is from 2 to 4 tomorrow. And that is a very important agenda, right? So if any students have any queries or any suggestions, please keep posting that. And I'll be responding to that as effectively as possible across the session. Okay, best of luck. We'll meet tomorrow 2 to 4. Thank you for participating today. That is it for the day 5.